A rate hike could be incoming. Today, we're going to be breaking it down for you. But before we get started, I want to thank our sponsors.
You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold debit card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started.
All right, guys, let's get into it today because there's a couple of things I want to focus in on. The Fed rate hike potential in 2026. You had a little bit of a dip, but now here recently, over the last few days, we started to see this move, and it's holding at a 34%, but considerably up from where it was right there, which was May 20th. Just yesterday, we saw 23%, and then all of a sudden, boom. And there's a reason why that has occurred, and that is this right here. The Fed meeting minutes now are showing that the majority of officials thought rate hikes may be needed if inflation persists. So this is a big turn of events. I would agree with this. The market could see this in a bad way. In fact, if we see Kevin Warsh going in on this, I wonder how this is going to play out with Trump. The odds right now of a rate hike by January or above 55%. Right now, rate cut, 0%. So this is not looking good for Trump's overall plan of what Kevin Warsh was designed to go in and do at the Fed. But instead, we may end up getting a rate hike literally out of the first meeting. Let me go to a clip real quick because this will get into whether or not it can be expected. Take a look.
So you turned some heads today because you're such a bull in this market, and you stay with your target of 82.50 for the end of the year. But you think the Fed could actually hike rates in July?
The 2-year is now indicating that the federal funds rate is too low. The federal funds rate range is 3.5% to 3.75%. The 2 years at 4.1%, and it's a pretty good leading indicator of what the Fed should do, and very often it gets it right.
So you're one of those in the Fed follows the market camp, it sounds like.
Well, I think the Fed doesn't really want to get behind the market. Being behind the market is being very much behind the curve.
All right, behind the market, behind the curve. That's what everybody's looking at. What I don't understand is how we get rate hikes and we could still see another blast off in terms of the SPY. So very interesting points right now. Now, there are some things that could play into this. Most of this has been centered around data collecting, and this is something that Jerome Powell talked about all the time. But David